What's up, everyone? Guy here, Minority Thinker. I hope you're doing well. It's Tuesday, July 12th. Let's give you some updates. Let's get straight to the point here. Some of the big events coming up here this week. First thing first, the CPI report, guys. July 13th, that's tomorrow. Now, if you're an investor, opportunist, that is a crucial report, guys. So keep an eye on that report because that will eventually lead to what the Fed is going to do in July 26, 27 as far as raising the Fed fund rate, whether it's 75 basis point or 100 basis point, 0.75% or 1%. That's based on the CPI report. Okay, looks like the market is already priced in somewhat. Wall Street tumbles at close as worry mounts ahead of CPI report. White House already anticipated it. White House downplays upcoming release of elevated inflation numbers. White House continue to blame high inflation number on Russia, war on Ukraine. This is White House press here. On Wednesday, we have a new CPI inflation data, and we expect the headline number, which include gas and food, to be highly elevated, mainly because gas prices were so elevated in June. So they are anticipating a high level of the CPI report. So it could possibly be the highest in 40 years, beat the 8.6 the last time around. So that's what they're anticipating, and the stock market, crypto markets reflect upon that as well. Okay, guys, let's take a look at stock market here. All around down. VIX actually up to 27 now. Now I find this article very, very funny, to say the least. The July 8 article. Is the recession canceled? The question mark. A strong new jobs report appears to make a mockery of the shrinking economy argument. So basically, this article, I have a link in the description below as well. This article mentioning that because of the low unemployment will basically counteract that of the recession. And this couldn't be further from the truth. This is actually the opposite. Because the Fed will look at this unemployment rate as overheated plus inflation, and when they're meeting, depends on how the CPI, which we kind of already know that's going to be at 8 points in the 8 range, if not higher than the previous one. They're going to meet on 26 and 27, and that's where they're going to basically raising the rate or hiking the rate to whether it's 0.75 point, or 75 basis point or 100 basis point is on the table. Okay, guys. So that basically be a perfect storm for the Fed to raise 1% or 100 basis point, because an unemployment apparently it's overheated, higher inflations. So that pretty much sealed the deal for the Feds to raise the max that they can raise. So when that is happening, guys, it's gonna be bad. Bitcoin, commodities, everything, gas, oil, so everything is gonna basically tank if that happened. Okay, guys, and that's a probability, highly probable. That's gonna be the outcome, because they're basically give you hint already from the headlines. Headlines here, White House already give you a hint. So let's switch to real estate. Redfin just came out with this article here yesterday. Redfin home sales canceled nationwide in June at the highest rate since pre-pandemic. 60,000 home sales agreements fell through nationwide in June, according to Seattle-based Redfin, marking the highest percentage, 14.9, since March and April of 2020, when the housing market nearly came to a complete halt due to the start of the COVID-19 pandemic. That is bad news, guys. The slowdown in housing market competition is giving home buyers room to negotiate, which is one reason more of them are backing out of deals. I don't know. I mean, they can spin this whatever they want to spin it. A lot of folks out there, I know, I'm in the real estate business, I'm a real estate professional. A lot of folks are spinning it in a way that I think it's not a good thing. They're spinning that as it's an opportunity now for buyers to be able to get in on the deal more easily. I was like, true, yes, but they forgot to tell the buyer that the outlook. Hopefully the buyers do research or listen to this channel, but they forgot to tell them that the risk, a probability of a decline or home value depreciate by back to the pre-pandemic level or even lower. In Seattle area, from my previous video that I did, it's in the 40%, 34 to 40% overvalue. Now that's the potential of it for it to drop, because the past 2 years, it's consistently up 20% past per year. So that's 40% up past the past 2 years, and typically prices increase in about 5% per year. That's a typical. Now it's up, it's plus 15 per year. So that's technically 30% overvalue the past 2 years. So now I forgot to tell them that, are you willing to buy the house that's going to be overvalued 35+%? And if there's a fallback, your price can depreciate that much. Will you still buy it? I don't think so. Okay. And what's worse is that the interest rate. If you lock in the interest rate at this low of a level, chances are you can't refinance it at even lower level. Okay. And I hear a lot of folks basically saying that the window is a small window, that when stuff hit the fan, the Fed's gonna come in and rescue. There's a probability, but that probability I think is very slim because of what we're experiencing right now. Inflation. If they come in a lower rate, or lower the rate, do a QE or a stimulus, which I doubt it's gonna pass. But what that's gonna do, it's gonna raise the inflation rate to semi-hyperinflation, and that, my friend, it's not a good thing. That's when you have civil unrest. When that happened, okay? So the days of feds are basically hand tied, okay? They can't do anything. Once inflation is sticky around this high, I have my theory behind the actual number of CPI, okay? Now I know I'm not a doom and gloom, but the inflation too will pass, but currently it's not. It's sticking around for the next 12 months at least, okay? Because of, supply chain, China lockdown, disruptions in the oil industry, obviously the war also maybe contribute to it as well. But at any rate, they can't really do anything. They can't stimulate the economy because that will basically pump. The whole goal right now is to lower the inflation. And they could have gotten away with it if the inflation were to be low, and they try to hide it by saying that it's transitory, but it's not. So they have to admit that they're wrong. So that's that. And now they're going to come out. It's going to be, it's going to go, it's going to be peaking. Now that too might be a lie because gas, it was $2.30. Now it's $6 here in Seattle, Washington. So that's double. I mean, where did they get the 8% even the real estate and rental and leases as well. I mean, 20% each per year the past 2 years. That's more than 8%. That's so the true number of the CPI, I think it's much much higher, and they don't want to spook a civil unrest by coming out with a massive amount of the. If you focus on the three of the main source of allocation of everyday people money, that's food, gas, rent, or mortgage. Those things, the inflation is much much steep. Okay, lower the rate, which they can't really lower any lower. It's only I believe it's 2.75 Fed fund rate currently. Take a look. Current Fed fund rate. Yeah, it's 1.75. They can't any lower on that and stimulate the economy, and they've been at zero for a long time, with trillions of dollars in stimulating the economy and not able to do so, and put us in this types of inflationary. Imagine if you pump more money, that inflationary, it's gonna create civil unrest, guys, chaos, riots. Okay, stock market, they're not going to do that. They're gonna, so a lot of people are banking on that to buying the dip, burst the stock market, burst all the commodity. Once the Fed saw this happening, that they're going to come in. There's a probability, but I'm not going to rule it out. But I believe this time around it's completely different. All right, they're switching their game plan until basically once they have once they control their inflations, which they tried to do before, not this time the midterm election, but 2024 election, okay? And that's the main target, is trying to dampen the inflation, though, engineering a crash because of inflation. Now, if you can bring down inflations to a 2 or 3%, then they can do a QE. So you have 2 more years, guys. That's at least 2 more years until the election, okay? The presidential election. So 2 years, that's the horizon of the market, okay? All right, guys, that's it.